Good afternoon. Welcome to Options Tender. It is FOMC day. Welcome, everybody. We have Wednesday, September 18th, 2024. Today's a very important day. We're expecting rate hikes and 25 basis points, 50 basis points. I don't really care. See the way the market reacts to the rate cut. I think, in my opinion, the market will pop, and then once it hits some of our targets or one of our targets, then drop. So I've been kind of laying out the same plan over and over, and then I have a very micro term game plan if the market drops. Okay, so I don't think it is, but anything could happen today. So we're doing this video at about 12:45 Eastern Standard Time intraday. If you're interested in getting these videos intraday, consider becoming a supporter. And I do individual analysis and trade alerts for those different levels as well. So yeah, just 99 cents and then $3 for the individual names. Okay, so thanks for joining us here. Let's jump into it. We're going to do SPY on multiple time frames, and we're going to take a look at the VIX as well, and maybe the Qs, but that's just about it. There's all sorts of trade setups. The market looks in a very bullish in the near term situation, so I do think it's going to continue higher. It's just a matter of from where. So we have the 2000 top, 2021 top, 24 forming a top now. This could take 3 months, 4 months. Takes a long time to happen. We have negative divergence on the monthly time frame. Very, very important, because this is going to play out. When it does play out, it's going to be for months to years. Okay, let's go down to the weekly. We're going to spend most of our time on the 65, just looking at the formation. Shouldn't be a very long video. Forming this channel here, will we test the bottom of the channel eventually? I sure think so. It's not a real channel yet. There's only one touch here at the bottom. This is just a potential area here. We also have a couple dash lines just in case, where we have geometric potential trend lines as well. But coming up here, we eked out a new high already. So technically, our checklist is satisfied. We have negative divergence now on the weekly time frame. Okay, so that's why we have to be very careful today. This could just play out now, as of today. Now we have triple negative divergence right here. Well, double. On the RSI, negative divergence on the MACD, on the slow stoke. Okay, super important. That's what we were waiting for. That's what's happened. I don't think that's going to be it yet. Let me show you this. So and this is on the weekly time frame. We're right at our spot here at 561. Again, I don't believe that triple tops happen like this. Okay, so but anything can happen. This is our last target here on the weekly time frame. We're at it, we're struggling at it, and we're actually kind of above it right now. So we'll see how this weekly candle ends. But this is a possible. Here's how we're counting it. We're looking at this as an ending diagonal. All waves are made up of three waves. There's 5 of them. ABC for 1, ABC for 2, ABC for 3, ABC for 4. And now we're looking for this A, B, and C to complete. Technically, like I said, this could be complete because we already have our high here. We have a 5-wave possible move, but I'll show you on the lower time frame why I think it still goes further and what you can look for to be cautioned if not. So we had our daily time frame. Trend is our friend. We have our bearish rising wedge, fake break, breakdown, back test. We have this consolidation area that we're just not quite above yet. We peaked above there. Could be considered a fake break. Got to be careful, right? FOMC. Put protection on today. like I will. And I already had some, took it off, and I need to add some into the FOMC at 2 p.m. Eastern Standard Time. And so this is our downtrend line, made a new high here. Again, this can be ABC for our ending there. Negative divergence. Look at that. Now we have negative divergence on the daily. This is super, super important. Another negative divergence. And the RSI. Everywhere, you guys. This is what we were waiting for. Again, we didn't have negative. We had a long-term negative divergence, but after this one played out, we were looking for another one. We have that. All the conditions are in, so you have to be super careful. Let's move over. Okay, time reference. We're at a time reference right now. So again, this could be it. Later, we have the 20th. We'll see what happens in this cluster. We have a big cluster over here in the early October. So if this grinds to the upside and just grinds, maybe it takes that much time. But I'll be looking at the 28th especially. I'll be looking at the 28th to see where price is at on the 28th. Okay, or if we get just a launch today to the upside or downside, we'll be looking for the 19th, 20th, 23rd. So that would be going into Friday, into Monday. We'll be looking for something to happen. It depends where price is. Okay, if on the 28th the price is up here, then we're looking for a reversal. If the price is down here, we'll be looking for a reversal the opposite way. Okay, the conditions are bullish. We're headed to the upside. We're just getting a reaction off of all-time highs. Okay, that's pretty typical. We're forming a ascending triangle. Does it break out from lower prices as market structure continues? Do we fall down? That's the big question, to maybe 550, 555, and then go up for our targets? Or do we go directly from here? That's what we're going to be talking about in the lower time frames. Let's go there. Again, this is going to be a short video. I want to get this out to those who are seeing this before FOMC. Okay, so we have our ascending triangle. You see we're at the resistance right now, but here is what we're looking at. We have positive market structure here, okay? And what we have, and I'll show you the other board here, is a possible 1, 2, 3, 4, and 5. I do believe that is the scenario. We went long here on the trend line because this wave 5, I think, is going to continue. I think we're going to get a extension, and what that means is after wave 4, now this is at a 1, 2, and actually a 1, 2 setup here to where price is going to go higher. Okay, so what we need to look for is this low being taken out just under 560. That's going to be very important today. Now with shenanigans, you can get a spike under there, and things happen and it skews what our counts are and our structures. But just know that this low, if we close below it and or just start tanking below it, it's got to get back above that low. It's going to be a very important low here because we're forming this structure 1, 2, 3, 4, and now we're looking for a 5-wave move to continue higher into our targets, time and price. 580 is our target. Now here's what it looks like on the count. Okay, so we're looking for this to be an A, B, and then C. Okay, so this zigzag 5, 3, 5. Now going in closer so you can get a better view of this. This is the low here, and then you get a higher low for wave 1, 2, wave 3, 4, and now with the extension, because this was a leading diagonal. So you have a 5-wave, 3-wave, 5-wave, 3-wave, and now we're looking for a 5-wave move to end this. Is it going to be an ending diagonal? Is it going to be impulse? I don't know that, but knowing FOMC, we're going to get some sort of impulse wave. So this wave 5, is that done? That's the question. 4 and 5, is that done? If we break below this market structure here, then yes, our wave 5 is here. If we get an extension, then we move our 5 after we get a 1, 2, 3, 4. They can cross if they need to, if it's an ending diagonal. If not, it's going to be, you know, probably a very small wave 4 time-wise. And then wave 5 to end it. 5 of 5 of 5. Okay, so that's what we're looking for. This should be impulsive. Going into time references, we have that 926 here. We'll be looking for time frames in between, where depending on where price is. If price gets directly up here today, going into the Friday, I should say, then we'll be looking to see if there's a structure that of 5 waves. Otherwise, we consolidate, and there is minor targets up here, but our ultimate second target, our first is 127.2. That's a 580. And I think with all the divergence happening, I think that's going to be it. Then you have minor targets in between, and 162 would be all the way up to just about 600. So we'll be looking to see how this extends. Well, we really have almost a finished structure here. And I don't know how far this can, you know, maybe when we get to wave 4 here, we have a whole nother 5-wave structure, and that extends the wave 5. Wave 3 is already longer than wave 1. So wave 5 can be as long as it needs to be. Maybe it's a blow off top, get all the way to 600. I don't know that, but we'll be scaling into our puts with call protection up into our 580 target. If we break back underneath the 100% here, which is this former high, we break back underneath here after getting above, then that move is over. VIX. I want to get you out of here. All I've been looking at the VIX is we're at this huge resistance here, and we're rejecting off of it now. And so this falling wedge here, I think is going to continue. We have lower highs and lower lows. I think it continues a little bit lower. Maybe it just back tests for a while price goes up. We'll have to see this, because technically this is a breakout here, but we still have lower highs. So we have to watch this point. We have to get above the 200 moving average on the 65 and stay above 19. 19 will be our point here to watch for the VIX. All right, that's our important level. Let's get this video out to you. Thanks for joining us here at Options Center. Have a wonderful day. Don't forget to like the video. Very important day.